Alright guys, we are back after a pretty lengthy hiatus with our fourth technical analysis video. So, we're doing 16-week dial challenge on the other YouTube channel. I'll put the link in the Discord for you guys to check that out if you guys are interested. And if you're not following all the socials and shit. But regardless, that challenge entails one crypto video per week on this channel. So, today, we have our fourth video in the technical analysis series, and our topic is order blocks. Order blocks, baby, that's what we're doing today. Order blocks. So, get your fucking notebooks out, because we're fucking studying up. Order blocks, baby. Alright, let's get right into it with some examples, and just what an order block is. Now, I haven't done this in a while, so we're reading off the notes. Sue me. So an order block, basically, we'll talk about bullish and bearish. I'll just give you an example while I explain it. An order block is the last, for a bullish example, it's the last bearish candle before a big move up. And for a bearish example, it's the last bullish candle before a big move down. So signs of an order block is consolidation. So as you guys can see here, this is the daily chart, and we have 1, 2, 3, 4, 5, 6, basically like a week and a half of straight consolidation right here. And then we have this bearish candle right here, which we'll grab a little rectangle and we'll zoom out a little bit. We have this candle, boom, boom, and then you can see price deviates massively, which is a sign of an order block. Price deviates massively, and then after a long time, the price traces back down here. So as you guys can see, this is from the last candle. Price goes back down and then pushes back up. So you can trade order blocks in this fashion. When the price deviates, you see that you have this candle, you can mark this box. When it comes back down to it, you could long, boom, take a shit ton of profit right there if you get in like right here. You're getting like probably 300–400% right there, depending on your leverage. Or if you held on from there, I mean, you guys know what happened. This is 63. This is a $51,000 entry. It's damn near 2x with no leverage on Bitcoin. But nonetheless, this is what it is. It's the last bearish candle before a big move up, or the last bullish candle before a big move down. And then when price traces back into it, like so, you can trade that. And you can also just get a better idea of how the market's going to move, because there's also a lot of liquidity here, which is useful for the fibs, and then also useful for range deviation, which we'll get into probably in the next video. Maybe fair value gaps before that, but we'll get into range deviation and swing point liquidity in the coming weeks. But for now, order blocks, basically, I already said it before, I'll say it again, I'll drill it into your guys' heads. It's the last move up, or the last move down before a big move up, or the last move up before a big move down. And then what makes a strong order block, because if you're going to trade them, you want confidence. So what makes a strong order block? First off is consolidation before the order block. So here you can see consolidation, like I said, for over a week. And then also fair value gaps left behind after the, like, while the big move up is happening. So as you guys can see, this is a fair value gap, this is a fair value gap, which, boom, this one got hit, moved up, this one got hit, moved up, this one got hit, moved up. So it did leave by a lot of fair value gaps. This is actually a great example. And then also volume backed order blocks, which you can use the fixed range volume profile to determine, which I will show you right now. You grab a fixed range from the beginning of the consolidation to the end, right before the big move up. And then, I mean, this one I usually actually, okay, I'm gonna take it back. I usually do the candle before and the candle after. And then, okay, so this one, the POC is right here and the VAL is right here, which I mean definitely works. There was a lot of volume in this candle for sure, but for the best fixed range volume profile confirmation down here for the order block, you want the POC to be where the last bearish candle was, or for the POC to be where the last bullish candle was for a bearish order block scenario. But in this situation, we still have the VAL here, which is a good confluence. But that's what I mean by um, volume-backed order blocks. You want confirmation that there was a lot of volume at this point, because that's a good confluence that price will return. Because basically, price moves up, and then when people are getting in up here, down here, maybe down here, perhaps, they're setting their stop losses like right here, or like maybe right here. So, and then when price goes down, boom, sweeps through all of these stop losses, even all the way down here. So it sweeps through this stick as well. Boom, takes all that stop losses. That's so much cash in the market that the market makers will then use to send the price back up. And then they do it again because the candle's right here, sweeps lower, and then move the market up even more, even more. But that's a topic for a different video. But that's basically why you want volume-backed order blocks. And then another one would be following candles are engulfing, just big ass moves. As you guys can see here, this candle is fucking just engulfs the whole market. It's massive. Another one, huge, just like big ass moves. When you have an order block that's strong, you see the market move a lot. That's why this is such a great example. And then obviously there's smaller versions of this, smaller order blocks. Like this would be a bearish order block. That's a big move, but I mean obviously not as big as the first example. But consolidation, price reversal, down, big engulfing candles, fair value gaps, tested that fair value gap, push lower, and then yeah. But you do want big moves. And then also you want a change of market structure. So as you guys can see here, we were in a bearish market structure. So we were having high, low, high, low, high, low, high. And then there's a breaker structure here, low. And then, here, wait, let me just mark this out. Okay, so as you guys can see here, we're having a bullish market structure. There's some lower lows or lower highs, but overall bullish market structure, still moving up. And then a break of structure here to the downside, recovers though back up, and then it just consolidates for a while. So I would say a lot of people would think this is just gonna reverse from here and just go back down, cycle, consolidate from here. So you could say it was a break of structure after just consolidating. And it obviously was a break of structure given that this move up was just fucking massive. And then same thing with that bullish scenario we just saw. Consolidation. Consolidation, big move down. So you could almost say this looks bullish. And then move down, break of structure, and then just straight consolidation for a couple days, big move down. So that's what you're looking for. You want to break a structure, and you want big moves, volume backed, of course. And then a couple more is you want them to be on higher time frames. This isn't a strategy you would not. This is not a strategy that you would want to implement on the hourly time frame, on the minute, on the 5 minute, the 15 minute. I would use this on the day minimum, usually the weekly, but yeah, I mean, obviously higher time frame just means more respect for any confluence, but don't trade 30-minute order blocks. They're probably just like it's just not even a real thing that's going to be respected by any market maker. That's all retail stuff. Low time frame for the most part. I'm actually not going to say that, but for this at least, do not use it on low time frame. And then you want the price to deviate away from the order block for the longer bet, like the longer is better. So as you can see, the price deviates away from the order block, which is here, and then consolidates away from it for a while. It doesn't even get close to it for weeks, and then it kind of gets close, but it front runs it. I mean, it doesn't really even get that close here, but and then it goes straight down into it. But you want it to go completely away from the order block for a while. Let traders forget about it, set their stop losses there. Oh, it's not going to hit that level again. Boom. A lot of money's made for the market makers and for you if you trade it right. And then, sorry, I'm just reading my notes. Yeah, so the more of all of those confluences that I just talked about, the more of them that you're recognizing and seeing, the better for your trade. You're gonna get even more win rate. Just the more confluences you have to stack. If you have volume backed, if you have consolidation, big deviation, time deviated from the order block, break of structure. If you have all of that, then the order block has a higher chance of being respected. And if it has a higher chance of being respected, your trade has a higher chance of hitting. So those are all the things you want to look for when scouting for order blocks. And then when you're looking or when you're making the rectangle for the order block, I mean, I probably should have used the magnet. I'll turn it on right now, actually. You want to have the wick of the candle included. And then, I mean, usually what I'll do is go in here, add text, and just say 1DOB, which 1 day order block, the time frame for the order block. And then I'll also get weekly ones, stuff like that. Just, oh shit, I fucked it up. Just based off of whatever I'm doing and whatever I'm looking at. Sorry this video is going so fucking staggery. I haven't done this in a while. And then also, if let's just say for example, I said that I wouldn't consider this being front run, but let's say that price does something like this and it goes down, let's say to here, and then goes back up. That does, I'm not going to say it does every time, but that definitely can significantly weaken the order block being like respected in the market. So if an order block does that, then I probably wouldn't trade it, because in my mind that just means that everybody set their stop loss right around here instead for some reason. Instead of down here, they were all like, oh, it's not going to hit that level. I'll set it right here, maybe for leverage purposes. But yeah, in my mind, that invalidates an order block for the most part. So I typically try not to trade very close front run order blocks, but yeah, all I'm saying is it can weaken the order block in terms of respect, in my experience. And then also, order blocks do work at all time frames, but you wanna have some higher time frame. Like if I was gonna go down to smaller time frames, because there definitely is big moves you can capture in here if you are on smaller time frames. You want to mark out the bigger first. So start big and work your way down. But I would say the lowest you'd want to use order blocks on would be the hour, which nothing. Oh, okay. Oh, wait. Okay, here it is. Like, there's definitely this, for example, is a bearish order block right here. Bullish candle, retested, moved down. bullish consolidation right here, and then range back consolidation because the POC is in the order block area, which is right here. Oh shit. Wait, let me. Yeah, that is the order block area, and the POC is in that. This is an hourly order block, and then as you guys can see, got hit, slight test upwards that got taken out right here, and then boom, straight down into profit land. But yeah, I mean, you could have set your stop loss right there, been chilling. But that's what I'm saying. So order blocks do work on bigger time frames, but I would still work your way down from the bigger ones because bigger time frame, bigger win rate percentage. And then also look for liquidity around your order block. So what I mean by that, if we go back up to the daily, is whoa. Yeah, so if we go back up to the daily, you want to see a liquidity point on the chart. So you could say right here would be good liquidity. A lot of stop losses probably under here. Same with this after a move up, but you just want to think that, like, if you were placing a trade here, would you put your stop loss here? If you were buying in up here, would you put your stop loss down here? It's probably a good idea. Say your entry is right here. This is like maybe a 50% loss or a 30% loss or something like that. Put your stop loss here, and then put your profit wherever you think it's going to go up to. But yeah, you just want an order block to have liquidity around it, because if there's liquidity around it, then like if there's a bunch of stop losses here, the market makers will make a bunch of money if the price hits here, which is exactly what happened because there was a bunch of stop losses there. So that's what you're looking for. But yeah, that's basically all you need to know about order blocks. I hope this video helps you, and I hope you guys can practice this, implement it well. Actually, no, we'll go over a few more examples because we only really did 2 examples. But yeah, those are what you want to look for. Now let's go find some. Let's go find some order blocks. We'll go down to a lower time frame just because we'll go to the 4-hour, just because that'll help us actually see more stuff. So okay, so here's an example. This is an example of what goes wrong, and in my opinion, what is a front-running example. So we'll get our rectangle out. We'll see if it has the confluences too. This is the last bullish candle, and then boom, and then 4-hour OB, enter. Okay, it doesn't. Okay, there we go. So I would consider this to be front run. Look how fucking close it is to it. Let's check percentage wise. Boom. Yeah, 0.71% away from the order block. Which, let's find out if it's volume backed. You could say this is where the consolidation started. That's where it ended. Yes, it is volume backed right in the middle too. And then also consolidation, break of structure, because it took out these lows. Yeah, definitely an order block. So you could say that this was front run. That would weaken the order block. All the stop losses were here for some reason, maybe because this liquidity, whatever. And then, boom, went right through it. Didn't even acknowledge it. Right through it. Continued up. Front running weakens the order block in a lot of cases. This is just an example of that. All right, let's move on to another example. And this is all live, by the way. I'm just scouting these out. and seeing what's good. This is another example of front run consolidation, break a structure, order block. We'll check if it's volume backed. This is probably like 1.7% away, is my guess. We'll find out in a sec. Boom, didn't care. Moved on straight up. Let's find out if I was right. Okay. This is the order block. Boom. Straight to there. Add text for our OB. Boom. Check if it's volume backed. You could say this is where the consolidation began. That's where it ended. Boom. Yep, in there. My guess was 1.7%. Let's see. 1.8%. Come on, baby. Within a tenth. And then, yeah. So got front run. And then did not acknowledge it at all. I mean, it went down fucking barely. And then immediately just went up, ignored it. Another example of front running. But yeah, let's find. Okay, so this one was actually pretty respected, but it would have been hard to find because there's another one right there. But also, I would say this is basically the same thing as, like, you could just say this is just a big fair value gap. I don't know. We'll use a different example because that one's kind of whack. Okay, this one works too, though. I guess. Sorry, I'm getting picky now. Let's actually move back up to the daily because I think it'll have more setups on here. But we are finding good examples of ones that are being front run, that's for sure. Okay, so here's a pretty good one. We have on the daily, I would say this candle. Boom. Across this way. 1 day OB, and then yeah, so here we have big deviation, break of structure, and then a move down, just wicks into it real quick, and then immediately moves back up here, and then wicks down. It does go through here, but honestly, if my entry was here, I would probably use this as my stop loss. And then it does move up significantly after. You could even say, boom, like, come on, that's pretty good. But let's find out if it's volume backed real quick. I would say this is where it began, this is where it ended. Yep, right in there. It's perfect. Oh, wait, actually, no, it's not perfect, because that would be the OB block, which actually makes it look even better because all of this was in it. So, yeah, if you traded that, let's say you even got in at the top of, where is my trade tool? That is so weird. Oh, here it is. Let's say you got in at the top of the box, just got in no, even with the TP of right here, which it did hit at the top, boom. That is a big RR, and then stop loss at that black right there, boom. It's a 5.04 RR. So, I mean, yeah, that's the proof's in the pudding, guys. Order blocks do work. Volume backed, break of structure, deviation, fair value gaps. And also, another tip is with order blocks, I think of it like if it just did this and then went back up, the wick through it is not a big deal. It can wick down through the order block, that's fine, as long as it doesn't close outside the order block. So see how this candle is filled in within it? That's all good. That's chill. If this candle closed, let's say it was like this, and this candle closed outside, I would consider that to be less respected, but there's still a chance for it. But that's why I was hyped when I realized that this wick was longer, because this closes within it. So yeah, those are examples of order blocks. I hope you guys enjoyed the video and look forward to the next 15 weeks of crypto videos. So thank you guys for watching. Let me know if you enjoyed it. Please give me some questions and feedback in the comments, and I'll see you guys at some point next week. Later, and stay dialed.